The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the charts that matter, a quick look at what traders are watching. And a US government shutdown appears inevitable as Republicans and Democrats fail to reach an agreement that would extend funding past a midnight deadline. Democrats want to modify the must-pass spending bill to extend health benefits for millions of Americans that are due to expire at the end of the year. Republicans say they must tackle that issue separately. President Trump has warned that allowing the federal government to shut down would allow his administration to take, quote, irreversible actions, including shutting down Democrat-initiated programs. The US Labor and Commerce Departments have flagged that the shutdown would mean all data releases, including September's employment report on Friday, would be suspended. Now, in the latest economic data, we saw job openings increase marginally in August, while hiring declined, with federal government job openings falling amid spending cuts. US Treasury yields were mixed, with some investors seeking safe haven assets amid the political uncertainty. The US 10-year yield at 4.14%, the 2-year at 3.59%, and the US dollar index down 0.2% on the day, while the Aussie dollar, which rose after the RBA decision to leave rates on hold yesterday, is just holding on to 66 US cents. Let's get across the charts though. Jonathan Tacadena from MPC Markets joining me. And Jonathan, you guys at MPC for a while have been saying we should be looking quite closely at defence, ETFs and stocks. What are we looking at today?
Well, I thought we'd just throttle back a bit. Let's have a think about how to start investing in defence. And I thought I'd just step back and go, look, let's have a look at some of the ETFs out there and just talk about them. Now, one thing I did find interesting that there were 3 ETFs that listed here on the ASX, and they're all about a year old now. So they were listed around September last year. So they've got about a year's worth of data now, and I'll talk about two of them today. All
right, so DEFEND, DFND is the first one you're looking at. What does that encompass, and what do you like about it?
Okay, so out of the 2 ETFs that I'm talking about today, we chose DEFEND because at the time that we saw the defence thematic sort of come into play, it was right around the time when Trump said to Europe, you're going to have to defend yourselves. Okay, so basically what we wanted was companies that had more exposure to the European side of the defense companies, and that's the main thing that we chose DEFEND over DTECH. So DEFEND has a few more European companies in there, like BAE Systems as an example, and some of the other names, but we chose that because of that European sort of spending increase.
Okay, so that one over DTECH?
I wouldn't say over, they're just 2 slightly different thematics. Like it's both defense. One just has more international. DTECH has more exposure to the defense technology companies. So DTECH actually has our own drone systems in there. I don't know the actual weighting. I think it was only maybe 0.5%. But if you have a look at DroneShield, that's broken out to new highs. EOS has broken out to new highs. And so if you want more of a defense tech exposure, DTECH is your play there.
I mean, it's extraordinary though, 86% up over the past year, the other one done incredibly well as well. So there's a lot of momentum, as you would rightly expect, in these ETFs. Let's drill down though into some of the stocks. So you're looking at a defense stock that's listed in the US, is that right? RTX.
RTX Systems. So this is kind of like the big daddy of defense. Yep. Okay, so it used to be RTX Raytheon. United Technologies merged with them in 2020. And basically, it's a massive conglomerate. So they do airplane engines, missile systems, radar systems, and they have been in defense since I think the 1920s. So they've been there a long time. And the key with investing in defense companies is that we're talking about defense contracts here. So while it's nice to see the small guys win a few contracts, basically we're talking about the US military here. They will always go with tried and true names, and that's why we like RTX Systems. So RTX Corp is the official name now. It's done exceedingly well. It's been increasing their dividends year on after year. So it's one of those ones that is actually a really, really great company in terms of what they produce, the levels of profit that they just keep increasing, and it's massive. I think I forget the actual number in terms of market cap. It's well over $150 billion. Like it's enormous.
Extraordinary. Now, it wouldn't be a talk with you, Jonathan, if we didn't have a little bit of gold. So Southern Cross Gold, the CDI, SX2. So this is an Australian stock with a defence metal exposure.
Exactly. So I've talked about Southern Cross Gold a few times now. So the first time I talked about it was the Lassonde curve. So the inventor of the Lassonde curve, Pierre Lassonde, is actually invested in this. I mentioned on the call, no, not the call, the last call on Friday, that they actually have antimony exposure. So antimony is actually a metal that's needed to manufacture bullets and actual missiles. So that's why antimony has been a hot metal of choice of late. And basically, Southern Cross Gold has actual exposure to antimony as well. Now, it's actually broken out to new highs today. Nothing to do with antimony. They've actually just been drilling in one of their sort of extension drills. They hit more gold, so this thing has more upside coming as well.
All right, more upside for that. And just a final quick word, I'm just curious to get your thoughts on silver as well, because that's outpacing gold in percentage terms.
Yeah, in percentage terms, but if you just have a look, it's neck and neck. Like Mark's been team silver, I've been team gold, and we always just look at each other who's winning. I still claim the victory. But yeah, if we're talking about actual metal deficits, I think silver could definitely outpace, because in terms of productions, the biggest producers are in Mexico, and obviously they've got a lot of problems in terms of stable government, stable environments to actually mine. So there could be some supply bottlenecks there. But then on the team gold side, you've got the guys with the printing presses constantly on the bid there. So I do think it's going to be neck and neck, and I think just hedge yourself out. I mean, like either one is going to do well. I'm still team gold, and I understand Mark's arguments. Some of the names that we actually like here in Australia, I've talked about polymetals, I've talked about Andean silver, and I've actually got another one that I'll keep to myself because I'm going to send it out to folks. But it's...
what about Legacy? Have you looked at that one?
Not quite yet.
Okay.
So I'll have to... There's just been so many that have just popped up, because silver's just out, as you said, it's had its run. But even last night, gold's just made a new high while silver's pulled back a little bit. So it'll be interesting to see which one wins.
All right, I think disagreements or heated discussions with Mark,
not
arguments.
I wouldn't call it heated. It's just more like who's winning more. And the thing is, the great thing is that we've both been right. So either way, we're making money. That's
absolutely. We love having you guys on. Thank you, Jonathan. Jonathan Tacadena from MPC Markets. That does it for this edition of The Trade. Be sure to join us next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.